Hello traders, it's Tuesday, October 3rd. This is Alan Hong, market analyst of GKFXPrime. So I'm going to share my daily analysis through this video. First of all, let's review the major market movements. The first instruments we're referring here is the dollar index in 4-hourly charts. So the US dollar index was rose against baskets of major currencies on Monday, up by 0.52% to 93.39 after data showing manufacturing activity was rose to its highest level since 2004, which was fueled the expectations of solid third quarter economic growth. According to the Institute of Supply Management said on Monday, its index of national factory activity was surged to a rating of 60.8 last month, which is the highest reading since May 2004 from 58.8 in August. So that must be the economist's expectations of a rating of 58. And the rally in dollars comes amid growing investors' expectations. The greenback faces a period of consolidations in the wake of data last week, showing speculators increase their short bets against the US dollars. So the value of the dollar's net short position was 17.36 billion in the week to September 29th, up from net shorts of 13.19 billion the previous week. Well, the single currency was added to losses against the greenback, with EUR/USD fell 0.64% to traded around 1.1742 on Monday. So it was pressured by renewed Eurozone geopolitical risks and downbeat manufacturing activity. So preliminary results released by the Spain's Catalonia region's government show 90% of the 2.26 million Catalans who voted on Sunday voted in favor of independence, aiding to Eurozone geopolitical uncertainty in the wake of the German election results a week ago. Meanwhile, the pound was also lower, with GBP/USD down 0.79% at 1.3291, the lowest level since September 14th, after data showed that the UK manufacturing sectors continued to expand in September, albeit at a slower pace. The safe haven Japanese yen was weakened against the greenback despite investors grew slightly more cautious after a gunman opened fire at a country music festivals on the Las Vegas Strip late Sunday, killing at least 50 people and wounding more than 200 others before the suspect was killed by the police. The death toll would make the attack the deadliest mass shooting in US history. Besides that, earlier Monday, data showed that confidence among Japan's manufacturers hit the highest level in 10 years in September, helped by the weaker yen and strong global demands. On Tuesday, the dollar was steady against the yen, with it at once as traders considered the implications of Japan's next general election later in the month. So the dollar was flat at 112.75 against the Japanese yen, and Japanese Prime Minister Shinzo Abe last week dissolved the parliament's lower house and called a snap elections for October 22. So Abe's ruling Liberal Democratic Party (LDP) was initially expected to win the elections with relative ease. An easy win, however, is looking less assured, with popular Tokyo Governor Yuriko Koike forging an alliance of opposition parties to challenge the LDP. The Australian dollar was little changed at 0.7826 on Tuesday, and having pulled back overnight from a 2.5-month low of 0.7795 ahead of the policy decisions by the Reserve Bank of Australia on Tuesday. Having a tad in commodities markets, the gold price was fell to a 7-week lows, down $8.51 or 0.65% to trade at around $1,276.50 a troy ounce on Monday, amid a dip in safe haven demands after manufacturing data top expectations, pushing yields and the dollar to session highs. So the gold price made a weak start to the month, added to losses from the previous week as investors continue unwind their bullish batch on gold after upbeat manufacturing data pointed to underlying strength in the US economies. So the drop in gold prices comes against the backdrop of a dip in bullish bets on the yellow metals as investors ditch the safe haven trade amid renewed tax reforms hopes and a year-end rate hike despite an uptick in Eurozone geopolitical uncertainty. So net bullish bets on gold fell to 212 and 600 according to a report from the Commodity Future Trading Commission CFTC on Friday. So gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollar makes gold more expensive for holders of foreign currencies, while a rise in the US rates leave the opportunities cost of holding non-yielding assets such as building. As for the oil price, it was settled lower on Monday. It fell $1.09 to settle at $50.58 a barrel amid signs of an uptick in crude output as data show OPEC oil output rose last month while an increase in US drilling activity pointed to rising domestic productions. Sentiment on oil prices soared as the data show a dip in the OPEC September compliance with the global pact to curb output, fueling fresh doubts over the oil cartel's commitments to rein in the output. And the reasons Reuters polls revealed that output among the organizations of the petroleum exporting countries was rose by 50,000 barrels a day in September as the cartel's overall compliance with its production cut agreement fell to 86%. The dip in compliance comes after both Nigeria and Libya, two countries exempt from the production cut agreements, ramped up the output. So production in Libya rebounded 30,000 barrels a day to 920,000 barrels in September as the Sharara field restarted after a halt of more than 2 weeks, while Nigerians' output increased by 20,000 barrels to 1.77 million barrels a day. So Nigeria agreed in July to support OPEC's production cap, but only after its crude output reached 1.8 million barrels per day. So the rise in OPEC production dampens recent optimism on oil prices, which follow after OPEC revealed at a meeting last month that its member compliance with the global accords to curb output hit record highs in August. So this was adding the fears of higher global output was a report from the oilfield services firm Baker Hughes on Friday, showing oil rigs operating in the United States was rose by 6 to 750. So now we're going to review the highlighted economic data that released on Monday as well as today focused data and events. Right, so yesterday, Japan has released its Tankan Large Manufacturers Index as well as the Non-Manufacturers Index. So both of these index was better than the expectations. And European Union was released its German manufacturing PMI as well, and it showed the target. It showed the result as 60.6, which just met the expectations of the economists. And besides that, United Kingdom also has released the manufacturing purchasing manager index in manufacturing sectors for September, and it was at 55.9, slightly disappointed compared to the expectations of 56.4. So during the North American trading hours, United States has released the purchasing manager index for the manufacturing sectors in September, and it is better than the previous with 60.8. Right. So as for today, Tuesday, the Reserve Bank of Australia will decide its interest rates for October and held steady at 1.5%. Right. So during the European trading hours, United Kingdom is going to release its construction's PMI, okay, the purchasing manager index for the construction sectors for September, and it is expected to slightly lower from previous 51.1 to 51. Okay, and last data tonight will be the crude oil data from the American Petroleum Institute. So it is a weekly crude oil stock, and any figure that's higher than the previous figures is considered negative to the crude price. Otherwise, lower than the previous figure is considered positive to the crude price. its technical analysis sessions, first instruments were referring Great British Pound against the US dollar pair in 4 hourly charts. So the sterling was weakened and fell to its lowest level since September 14th after data showed that the UK manufacturing sector continued to expand in September, albeit at a slower pace. So the pair GBP-USD was continued felt lower following the formations of dive cross by both moving edge lines. So currently, it is hovering a tad higher than the Fibonacci retracement level of 50 or at 1.322. So closing below this level will provide a signal for shifting trend directions become downtrend. Then will be suggested to fall further towards the next target at 1.312. On the upsides, the first resistance level comes in at 1.331, while the UK is due to release its construction PMI data today, which anticipated to provide further clue on the economic growth. The single currency was added to losses against the greenback and pressured by the renewed Eurozone geopolitical risk and downbeat manufacturing activity. So the pair EUR-USD continued its downtrend and fell through the support level of 1.171, signal to fall further towards the next target at 1.16. As for the upside, the nearest support levels can be seen at the level which been fell through at 1.171 and following by 1.18. The Kiwi was weaker against the dollars as well, with the NZD-USD pair continue its downside following a formations of dive cross by both moving average line in 4 hourly charts. So it fell out of the range from the lowest levels, signal to form more in the short terms, with a closure below the support level at 0.713 will provide another signal to continue its downtrend and fall further towards the next target at 0.71. So on the upside, the first resistance level still refer to 0.723. The Aussie was little changed ahead of the policy decisions by Reserve Bank of Australia on Tuesday, so the pair AUD-USD was traded lower and fell below the support level of 0.781. So this was suggesting for further downside in short term as retracement. So falling below the Fibonacci retracement level of 50 or the price of 0.772 will provide a signal for shifting trend direction to become downtrend. Then it will be suggested to have stronger bear. So the next support level we could refer to 0.764, and on the upside, the nearest resistance level can be seen at 0.781, which is the level we just fell through, and investors now are awaited the policy decisions by the Reserve Bank of Australia for further clue, and however, the central bank is expected to hold rates at 1.5%. The safe haven Japanese yen was weaker against the greenback despite investors grew slightly more cautious after a gunman opened fire at the country music festival on the Las Vegas Strip late Sunday, killing at least 50 people and wounding more than 200 others before the suspect was killed by the police. So the pair US dollar against the Japanese yen was remained traded near the recent high around 113. So closing above 113.3 was suggesting to extend its uptrend and surge further towards the next resistance level at 114, and on the downside we could refer the nearest support level at 111.9. Gold price was fell to 7-week lows amid a dip in safe haven demand after manufacturing data topped expectations, pushing yields and the dollar to sessions highs. So in 4-hourly charts, gold price was fell through the Fibonacci retracement level of 50 and $1,280 thresholds, and this was a signal to shift trend directions became downtrend and suggested to fall further towards the next support level at $1,263 troy ounce. So the first resistance level we could refer back to $1,280. The West Texas Intermediate crude price was settled lower on Monday amid signs of an uptick in crude output as data show OPEC oil output rose last month, while an increase in the US drilling activity pointed to rising domestic production as well. So the oil price was retreated from recent high at $52.80 a barrel and closed below the support level of $51, with another closure below $50 with suggesting for further retracements and fall further towards the next support levels at $49.20. So for the upsides, only with a closure above the previous high at $52.80 will open up a door for continuations of uptrend. So traders now are eyes on the weekly information tonight from American's Petroleum Institute to gauge the inventory level of the world's largest oil consuming country. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.